Hello everyone, I'm Zahid from Talks at Innovation Valley, and today we have very amazing guest with us, Alexander Piskunov. Alexander is a partner at Khan Ventures, a special situations investment firm with a focus on breakthrough technologies across the US, Europe, and Southeast Asia. There, he is responsible for investments, portfolio management, and fundraising, having founded and successfully exited his B2B startup in UK. Alexander is an entrepreneur turned VC, and amongst other engagement, he is a mentor at accelerators including Techstars, Plug and Play, and Founder Institute, and a speaker at tech conferences including Startup Grind and LSE Russian Business Week. Alexander is a member of task force on the application of AI in Pakistan and a strategic advisor to the Technology Innovation Agency of South Africa. Alexander is passionate about discovering undervalued opportunities, helping deep tech companies scale internationally, and developing links between founders and their wider innovation ecosystems. Really great and happy to see you, Alexander, and I really warm welcome you to the show.
Thank you, Zahid, very much for this wonderful introduction. I would love to share my experiences with your audience.
You are welcome. Alexander, before we jump to the topic, which is about startup at tech ecosystem, innovation ecosystem, and fundraising, I would love to know, and my audience would love to know about your life journey, including your schooling, higher education, and professional journey so far. So, share your life journey, including all the aspects of your life. How was your all this amazing and entrepreneurial journey?
Well, for sure, Zahid. So, look, I mean, when I was growing up, when I was studying back at university, I could not have imagined that at this stage of my life, I would end up as a venture capitalist. So, myself, well, I'm originally from Russia, but ever since I was very young, I lived, studied, and later worked in the United Kingdom, where I went to school, graduated from university, and then started to work in investment banking. Stayed there for a couple of years, realized that, the money is great, the deals are very exciting, but back then we did not really get as many responsibilities, and a lot of work was very uh, hierarchical and technical. So moved on to private equity, which was much more interesting for me because it did give me access to the entrepreneurs whose businesses we acquired. And I became back then really curious as to what's life like for the entrepreneur. And after some time, I left the private equity firm, started up a company of my own, which dealt with imports of exotic wines into bars, hotels, and restaurants back in the UK. And I scaled the business for a few years. I managed to sell wines from countries like South Africa, Chile, Brazil, and Peru, and Georgia. And that was an education by itself because we had to figure out everything from scratch, from logistics to contracts, negotiations, and whatnot. And I was scaling the business until a certain point when Britain decided to leave the EU, which for us meant that some costs went up, some key supplies went away, and business became less profitable than it used to be. So left the UK, moved over to San Francisco in the States, and started to work in venture capital. And for me, what was the most exciting aspect of work back then was an opportunity to engage with early stage entrepreneurs whose businesses and tech ideas were much more innovative than what I've previously dealt with throughout my investment career. And I stayed in San Francisco for 3 years, became a partner at the firm where I worked, and eventually decided that just as COVID was raging on, that San Francisco suddenly became far less of a wonderful place than it used to be, and perhaps it's a time to look for new investment opportunities and ideas across the globe. So I moved over to Southeast Asia and started another firm, which is where I'm a partner at right now. And right now we specialize primarily on growth stage and late stage deals in the field of deep tech.
All right, Alexander, really, really amazing journey. So, Alexander, what in your experience defines a robust startup ecosystem? How can regions foster such an environment?
Well, look, Zahid, in terms of how to foster such an environment, I can tell you for sure that if there was a golden road, then we would have definitely seen many more successful startup ecosystems than they actually exist. But to begin, I would definitely say that, at least from my own experience, to me, a robust startup ecosystem would be the one where a startup can grow from a very, very early stage, from an idea stage, all the way to becoming a public company. So, get angel financing, get support from early stage VCs, and go to the private equity route, and then maybe get acquired through an M&A or go to the public market, just by focusing on the local market and using the resources of the local investors and corporate partners, as well as to be able to specialize to fundraise from those specialized investors, whether they helping out with key introductions or helping out with international growth or support in terms of contracts negotiation and things like that. So basically, the smart money, uh, and that's assistance which comes all along the way. And unfortunately, from my own experience, there were not as many ecosystems which have managed to do so effectively. Maybe other than Silicon Valley, I would say that to a certain extent in several industries, you can also say that the UK ecosystem and London in particular would fall into that. But other than that, there are successes, but there are also many failures. And I think that part of a problem related to fostering such an effective startup ecosystem is the fact that ultimately it's a very long-term process which cannot be top down, and it cannot be simply just enacted by the government as some countries try to do. And on the other side, there needs to be more of a collaborative process between entrepreneurs, investors, scientists, and ultimately government policymakers as well, in order to achieve those meaningful dialogue and to arrive at the specific objectives or capabilities that each side, each party needs to bring over to the table, so that ultimately each country and each unique innovation ecosystem, they're able to develop a specific niche expertise, which is useful on the local level, and it's also quite competitive on the international level as well. So I think I can talk quite a lot, about successes and failures, but to answer your question briefly, I guess that will be it.
All right. Alexander, since we are today addressing the questions regarding startup, EdTech ecosystem, innovation ecosystem, and funding, etc. So first, I would love to touch a question on the startup related queries. Could you share insights on crafting an effective pitch to capture investors' attention? What elements are crucial in a pitch?
Sure, great question. So look, just as there is no ideal way to structure a startup ecosystem, there are no ideal pitch deck either, right? So ultimately, I would advise entrepreneurs in general to avoid the technical jargon, to try and back up any kind of statistics or data which they're using in their presentations and forecasts, and to make it accessible to a wide amount of investors coming, from family offices or specialized funds or corporate venture capital arms, because ultimately, even if they would not be interested in investing in you based on the basis of your pitch deck, if they understand your idea and they believe in your vision, then they can potentially introduce you to somebody else who might be more relevant. But if you are asking about the content, then I would definitely say that, for example, if you are a deep tech startup, so if you are dealing with innovations in the field of artificial intelligence or, IoT or robotics or space technology, then it's very important that throughout your pitch deck, you pay specific attention to showcasing the advancements brought by your technology and the actual innovation factor, as well as, for example, how is your team uniquely positioned to bring those theoretical and R&D based technologies onto the commercial field, right? Also, I would say that it's also very important to showcase as to how big the market is, how is it going to grow in the future, and what exactly would be the key driving factors, as well as to explain, yes, the market is growing, but why right now would be the best time for you to introduce that technology onto the market as an entrepreneur, and why right now would be a great time for the investor to give you the money instead of waiting for a couple of years once that technology and your startup itself they become less of an investment gamble. Other than that, I would say that it's also quite important to showcase what exactly do you want from those investors other than the money, right? And just as I was explaining when I talked about the startup ecosystem, by smart money, I mean the things to do with, for example, key introductions to potential future investors or corporate partners, or assistance in global expansion, or maybe help to do with validation of your product, or the building of your MVP and things like that. So basically, if you showcase to your investors or to the prospective investor that you know not only your strengths but also your limitations, and you're able to convincingly explain to them as to why exactly do you want those assistance in that particular stage, then it's definitely not going to be disadvantage on your part, but it would actually showcase to your investors that you're also quite humble, which is also very important, especially at the earlier stages. And I mean, other things that you can potentially focus on when you're building your deck are obviously to do with the analysis of your competitive situation, right? So maybe talk about the closest 4 or 5 of your major rivals onto the market, be they, the traditional ways of solving the issues that you're trying to solve, or the way that the corporations do it, or the way that your startup competitors approach it, and then talk about how exactly are you different from them, not only in terms of your product features but also in terms of your customer niche or geographical confines, or if they are your startup competitors, maybe also mention how much have they fundraised in relation to you, and who were your key backers in relation to them. Other than that, just on a final point, not to go into too much detail, but when you're talking about your competitive advantage, I would also perhaps showcase, the timeline for your future developments, right? So what would be your key milestones in the next, let's say, year or year and a half, in terms of fundraising milestones, in terms of product development, in terms of key hirings, or expansion to new markets, or maybe the signing of some key corporate contracts and things like that. So basically, if the investors give you the money now, how is it going to impact your business into the near future?
All right. Alexander, is it possible for a solo founder to establish a tech startup, especially when the founder is not with the computer science background or technical background? Maybe he's from the business background, MBA.
Well, look, I mean, Zahid, I think that when it comes to the education tech, I think that you don't really need to be a founder with a computer science background or technical background. What is very important, however, is for you to really understand your product and to understand how to sell that product to your target audience, right? So to understand their pain points, to understand potentially how much they're able to pay, and what would be the delivery mechanisms, right? So would it be selling your product digitally? Would it be, selling through partnerships, networks, and things like that? However, on the other hand, solo founders, we still have to understand that, for example, for us as an investor, being a solo founder would be potentially a red flag, because we do understand that there are only 24 hours in a day, and no matter how well networked or accomplished you are, it will be very difficult for you to wear the multiple hats and to accomplish everything that needs to be done. So we do prefer well-rounded teams. Maybe you as a CEO with a business background, as well as your co-founder who is the CTO, who is handling the technical aspects to do with your EdTech platform, or the data collection methodologies or things like that.
All right. So, Alexander, when we choose co-founder in a startup, what is ideal? What is ideal when we are selecting a co-founder? I mean, what should be the area of the co-founder? For example, if the founder is maybe from business side, so it is necessary that the co-founder should be from the tech side, or what is the best combination being founders?
Well, look, Zahid, I'd hate to give you the same answer, like the traditional consulting answer, in that it depends, right? So once again, if you're in a deep tech field, then it's very advantageous for you, for example, when pitching to investors, that your whole co-founder team is quite technical in the nature. So maybe you have PhDs on the subject, maybe you have, guys who had prior work experience in large tech operations on specific projects. So maybe you have previous successful startup experience that you have then later exited. But for example, in the edutech field, what would be more important is, once again, to showcase that you as a founding team, rather than you simply just as a CEO, have a convincing vision for the long-term successful development of that company, right? And if you have assembled a team which complements each other quite well, so for example, you are quite skilled, once again, on the technical side or on the side of selling your product onto the local market, but then your co-founder has more international experience. And here you are, at the stage in your startup's journey where it is much more about, scaling your existing local successes onto the international stage. Then for the investors, it will be definitely much more advantageous. Another thing which the investors really do look out for when it comes to, assessing the strengths of the founding team would be to understand, how well worked are you as a team, right? So maybe you've had prior experience in working with each other, once again, as part of a large corporation or as part of a previous startup that you have, established and later sold, or maybe you have studied together, right, for a good amount of time. And the reason for that is because investors understand that, especially, at the earlier stages of the startup development, everything can and often case does go wrong. So if you understand as a founder, how does your co-founder think and how does he make decisions in stressful situations, then for the investor, it's advantageous because, things might not go smoothly, but ultimately it would not lead to the breakdown of a startup. Even though it might mean that slightly more money has to be invested, or the commercial traction would take longer to generate, but still the likelihood that the startup would just go bankrupt would be much smaller.
All right. Alexander, for aspiring entrepreneurs, when do you believe is the optimal time to seek for funding? Are there common pitfalls to avoid?
Well, look, I mean, ultimately, I think that when it comes to the optimal time to seek financing, I would say that it is a time when you have already built up your team, when you have already validated your product on the commercial market, when you have, reached a stage where the growth in sales that you generate would be slightly more predictable. right? So it's much less risky for the investors to get in at this stage. So if they do give you the money, it would mean that, to put it, in simpler terms, they would just be adding more coal into the fire of your already speeding startup train, rather than trying to kickstart it, because there will be greater validation, lower risks, and as a result, for you as an entrepreneur, it will be much easier to convince the potential investors to invest in you in good terms, right? And it is at that stage when you, as an entrepreneur, would be potentially facing a much greater access to the greatest range of potential financing, right? So you can get financing from VCs, from angel syndicates, from even bank loans if your business model is more predictable, or maybe even consider venture debt or other aspects. So unfortunately, to get to the stage, Zahid, it does take quite a bit of time, as well as effort and initial investment. So before this stage, which is ultimately the growth stage, before the stage is reached, you would still need to raise financing potentially, to at least validate your initial hypothesis, to build up your MVP, to generate those initial sales. And as a result, it's still very important to consider the vast universe of options that are available at the earlier stages, right? So you can get maybe access to government grants, or go through an acceleration program, or get access to angel financing, or the one from syndicates. And as a result, for early stage entrepreneurs, it is still very, very important to understand the advantages as well as the drawbacks of each of those potential financing methods. Because if you have fundraised from a source which originally seems promising and the terms are good, ultimately, if you have not researched it enough, you might find that at the later stages of your company's development, those guys are not helpful at all. And if their reputation is not stellar, and if they're very, very local in terms of their smart money, then ultimately you would be, as an entrepreneur, potentially shooting yourself in the foot, right? And this is where I would advise entrepreneurs to really do the proper due diligence on the investors. Otherwise, this could be quite a big pitfall, which you have potentially could have avoided.
All right. Alexander, when it comes to the innovation ecosystems, what key components contribute to their success? Are there any use cases or examples that we could talk about?
Sure. I mean, look, as I mentioned, before, one of the key things for entrepreneurs to really be successful within an innovation ecosystem is for that ecosystem to be able to provide quite a big range of financing options, from, the idea stage all the way to a pre-IPO company, because those would appeal to entrepreneurs, from different sectors, from different experiences, and across different stages of their company's growth. Such as, for example, when we talk about experienced entrepreneurs, they already do have the network and the expertise as to how to do basic things, like, for example, how to do pitch decks or how to approach angel investors. But for the novice entrepreneurs, accelerators could be very helpful when it comes to, giving them access to angel investors at the demo day, or giving them access to foreign markets if they are, an overseas entrepreneur. So there needs to be quite a big range of those options available. And also, for the ecosystem to be successful, the investors across multiple stages, they do need to understand that they are here not as much to compete as there are to cooperate, right? Because, for example, without their assistance in product building or in team growth, which the early stage investors do provide, it will be very unlikely that the startup itself, they would be able to grow to a stage where the potential private equity investors, or maybe the corporate venture capital funds, they would be actually interested to seriously consider the investment in that particular company, right? While you would see, on the other hand, that in emerging markets, there is still so much more about competition, where people and investors, they try and invest as little valuation as possible without understanding that for an entrepreneur, especially the promising entrepreneur, it's not a good situation to be in to give away a significant chunk of equity at a very early stage for a small amount of financing, because it would mean that ultimately the entrepreneur would be almost going to work for that specific investor. So he would not be as motivated to grow that company over the long run. And in the developed markets, like for example in Silicon Valley or in UK or in Germany, the investors have grown to understand that, especially at the earlier stages, yes, they will try to be as helpful as possible, but ultimately their main business is to be, a portfolio manager, right? Rather than to dig into too much into the operational aspects within a specific startup. So ultimately, the main driving factor at the earlier stages of the startup growth would still be the entrepreneur. And it's really important that the entrepreneur is incentivized properly to grow that company, not only as a public face, but also as a main operational decision maker. And on the government side, I would also say that for the startup ecosystem to be effective, the government also needs to avoid the vast amount of red tape which there can potentially exist in order to make the operations of early stage companies much more manageable and less expensive. Because otherwise, in some ecosystems, entrepreneurs, either try and be international from day one, or they try to not disclose as much information onto the open market in order to avoid red tape or in order to cut costs. And as a result, it does, limit the ability to fundraise and to grow commercially.
All right. So, Alexander, when we talk about the EdTech space, what strategies are instrumental in building a thriving ecosystem for educational startups?
Hmm. Interesting question. So look, I think that first of all, it's very important when you're talking about edutech that there is quite a big amount of publicly available data, for example, about product trends, about consumer demand, about the ability of potential clients to pay specific sums and things like that, because it would enable the entrepreneurs and the startups they lead to come up with the products which are ultimately much more in demand and that are easier to fit into a specific product niche within the wider edutech field, right? And ultimately, for that data to be available, there needs to be quite a significant level of collaboration between the different actors who are, the educational authorities, which are willing to admit, often case, their shortcomings and pain points, and maybe suggest ways in which the earlier companies, the startups, they can, come in and fill that gap where the bigger guys are not really, pulling the weight when it comes to niches or specific technological products. And at the same time, the startups themselves, they also need to focus on that specific niche rather than try and cover every kind of vertical under the sun. Because ultimately they do not have enough resources, especially at the early stages, to chase after multiple rabbits at once. And for example, when you're talking about edutech, right, you can, as a startup, cater to children who are, potentially learning the language and are only, taking the first steps in learning that language. Or you can, cater to the students who are, preparing for the exams, or you can cater to the adults who are maybe, seeking to find a better job opportunity abroad. And each of those niches would be, different delivery methods, different prices, different products. And if you, as an early stage company, try and cover everything, I, as an investor, would assume that ultimately you would not be very successful in the majority of them. So it does pay quite a bit to actually specialize even at an early stage.
All right. So, Alexander, how do you envision the future of education, considering the impact of emerging edtech startups and technological advancements? Also, cover a little bit. I mean, share your views on this. That there are different delivery models of learning and education. For example, there is a model called recorded videos, like Udemy model. There is a model like live online classes. So
Hmm.
and there is a hybrid model, online plus offline. And so, I mean, how do you see all these things in future?
Well, sure. I mean, look, first of all, I would definitely say that I envisage the future of education and the edtech field in general to be increasingly digital, right? So, for example, the new study disciplines, whether they're language based or history or the harder sciences, to become much more relevant than they now. For example, in the field of digital literacy skills that would prepare for the world that is increasingly tech reliant. And from the startup side, it would also mean that the entrepreneurs would be much more able to offer personalized learning solutions, depending, once again, on different geographical regions, depending on different customer niches, as well as to provide more options for the consideration of each of those clients, right? So they would consider, their strengths, their weaknesses, their ability to learn, or to pay specific sums of money. That's one thing. I would also imagine that, in the next, let's say, 5 to 10 years, we would also see a much greater spread of the speed through which those solutions are actually delivered. And that speed would increase through the advancement of related technologies, like, for example, the speed of 5G communication, or quantum computing, that would be able to not only increase the speed but also increase the actual volume of the data which is transferred, which is processed, which is then later analyzed to deliver the specific results, which the clients and the startups can use to augment the existing solutions. And as a result, there'll be a much greater volume of products available. And finally, I do believe that gamification would also be a much more relevant of a factor, such as, for example, when it comes to developing new tools as to how students can be, drawn into the whole learning and education process in order to maintain the interest, right? And partly because of that, I would also imagine technologies which have emerged some time ago, but so far really did not manage to become as huge as some people originally envisaged them to be, like, for example, the virtual reality space, or the related fields, to make a much greater comeback. um, and at the same time, you would also see many more developers who are building their products, or making them available from one language into the multitude of languages to release a much greater volume of products as well, which would make VR much less of a toy, which it is now, but much more of an actually robust and viable learning mechanism for startups to exploit and for the consumers to actually make use of.
All right. Alexander, entrepreneurship education and digital skills education have gained traction.
Hmm.
Do you think universities are enough for business and tech education, or do you think edtech startups need to bridge this gap?
Well, look, Zahid, I think that unfortunately, to a certain extent, entrepreneurship cannot be taught, because it does depend on the surroundings in which the person is growing up, in which he is beginning his work career prior to the development of that startup, or maybe the way in which he's taught to think, because there is always the debate between people who are much more technologically oriented, or who are much more you know, relating the education and thought processes to the natural sciences, or, for example, when it comes to the actual desire and ability to take risks, which does distinguish, entrepreneurs from the people who are traditionally going the corporate route. However, I do believe that, when it comes to entrepreneurship, some things can be, if not taught, then at least, given the example of for the potential entrepreneur to at least have a better think in order to maybe arrive at better ways in which, some problems can be avoided or products can be scaled and things like that. So, for example, I think that it's very, very important to teach the aspiring entrepreneurs some ways in which different cultures or nationalities actually engage in the negotiation process, as well as to maybe how they even think about the wider world, because by understanding those things, the entrepreneur can be much better able to fundraise successfully or to scale their product or to sell that product. And also, it's very important to give the aspiring entrepreneurs an understanding as to, for example, how to do market research or customer research, or how to best, select the right investors for their company, given the existing stage. And problem with that is, on the investor level, or even at the high level, at the MBA level, those things, when taught, they become outdated almost as soon as you learn them in the classroom, right? So there needs to be a continuous feedback loop of, the successes and failures, as well as, maybe the exchange of opinions of people who did it across different stages and geographies, so that, the right best practices can be drawn and later applied to the local market. And finally, I guess I would say that even though it's very, very important to give potential entrepreneurs an opportunity to learn from the mistakes of others, at least, from my own experience of dealing with our portfolio companies, I strongly believe that we, as a human species, unfortunately, we only learn quite well when something happens to us directly, right? As otherwise, it's quite difficult to emphasize with the examples, no matter how much how vivid they are, no matter how much you read about them in the news. And as a result, to paraphrase a famous proverb, I do believe that a fool is not the one who learns from the mistakes of others, but a fool is the one who does not learn at all, right? And unfortunately, for that mechanism to work properly, it does require quite a bit more time, but the lessons which are drawn in that front, they are much more meaningful, because the entrepreneur can actually, feel them on his own skin, and then use that experience to generate a better sales strategy, or to generate a better vision in order to fundraise the right money from investors.
All right. Alexander, since you mentioned entrepreneurship cannot be taught, okay, even I say hardcore programming and coding also cannot be taught. You need to practice to do the practice for that. So since entrepreneurship or hardcore technical skills cannot be taught, they need to be practiced. They need practical exposure. Then what is the point to get entrepreneurial and technological education from MIT and Harvard and Stanford and other institutes? Why education then, especially the higher education?
Well, look, I mean, one of the advantages of the education at a top tier university is the networking aspect, right? So you potentially are studying right now with the people who would be, working with you in a similar industry, in a similar country, right? So it's a much better opportunity to get to know them, not only on the business level, but also on the more personal level. But also, even though the technology moves on, the foundation still stays the same, even though, especially in the programming field, you would very, very quickly find that once you have started on your professional career journey, that the things that you were taught in the classroom, they can be, either done much quicker or they are irrelevant as a whole. But education, what it does provide, a meaningful way to think about specific problems, as well as, give you a foundation which you can then later use to solve the issues that might come up during your work experience.
All right. Is it necessary to raise the funding? Do you think there is a link between the successful entrepreneurs and raising the funds?
Well, look, I mean, I think that it's definitely very important. Like, for example, for us as investor, once again, if we see that an entrepreneur has previously done it before, right? We do understand that he most likely does have the relevant network amongst potential corporate partners or amongst other investors. And as a result, it is much less risky for us to invest in him, because we know that in comparison to the other entrepreneurs who perhaps they are much more technically oriented, or they went to brand name universities, he would still be able to do it quicker and he would commit less mistakes. Going back to my earlier point as to entrepreneurs, as people in general, they do learn much better and faster from their own mistakes. So for us, it's actually one of the key things we look out for when we do decide on investing on earlier stages, as to not only the previous cohesion within the founding team, but also what has been their previous startup experience before. And sometimes, if you had prior startup experience that was not successful, but you did manage to, draw the right lessons, and you are able to sort of articulate those lessons quite effectively within your vision for the existing startup, then it can also be, quite a good thing.
All right. Alexander, as the landscape evolves, the overall startup ecosystem and the things are changing very rapidly in every aspect. What trends do you foresee in funding methodologies or approaches for entrepreneurs in the near future?
Look, so definitely, for example, if we're talking about the near future of maybe, let's say, the next 3 to 5 years, I would say that the trends that I see now and that I would expect to continue, first of all, is the growing volume of different financing solutions which are available for entrepreneurs, right? Some of which I have already mentioned before, like, for example, venture debt, or angel syndicates and things like that. So previously, to grow your own venture, you could only use either your own money or obtain bank financing, right? Which was much more useful if you were growing your own traditional business. Let's say, I don't know, a restaurant or a lemonade stand or a clothing boutique. And then, due to the greater appetite of investors for risk, due to the wide amount of different options available from the government to corporate and private institution or institutional sources, then you had many more complex different financing arrangements that you as an entrepreneur could secure. And this goes all the way, once again, from an idea stage all the way until you are a big company which is listed on a stock exchange. So venture capital emerged, and since then there has definitely been a ballooning of different options, which I would see expanding greatly in the near future. Like, for example, incubator financing, or venture studios or venture debt. And some of those things, they come and go. Like, for example, when crypto and blockchain were all the rage, you saw quite a lot of ICOs, the majority of which went down significantly in terms of their popularity and in terms of the amount of financing which the entrepreneurs were able to fundraise. And I would definitely see the options extending more from the developed markets to the side of the emerging markets, right? Because it's a natural way where the investors from the emerging markets, they're interested not only in real estate or in manufacturing or in the stock markets, but they're also considering more risky investment opportunities in tech as well. So new opportunities do emerge. And other than that, I would also expect that the new sources of fundraising would be available in the Western economies as well, um, to do maybe with more complicated financial arrangements, or things to do specifically for the edutech field, or for deep tech startups which cater more to their nature, which requires more capital, which is more R&D heavy. And as a result, the investors, they would be more um, willing to provide financing which is flexible and long term, but as a result would require more potential control given away in that startup if things do go wrong. Still, I do think that it's very, very important for the investors who are looking to offer those potentially new financing solutions to properly assess their risk appetites. Like, for example, the venture studios, they are much more capital and effort heavy in relation to the financing by accelerators or angel syndicates, but they also do take a greater chunk of equity in return. So essentially, they are becoming almost startup co-founders, and the investors who are thinking whether or not to offer that kind of financing, they do need to understand what kind of team can they potentially bring on board, how much of a hands-on approach are they willing and able to really fathom within their own existing methodologies and things like that. So there needs to be definitely a change in the way that the investors are conducting their due diligence, as well as in the way um, in which they are engaging the portfolio management aspect. Otherwise, we would definitely see a much greater increase in the rate of startup failures, especially at the earlier stages, especially in the fields which are once again very, very tech heavy, like for example startups in the biotech space, or in space technologies, or in quantum computing, and those kind of areas, they were already quite complex and long-winded from the get-go. So I guess on the final point, I would say that as I mentioned to you before, when it comes to, for example, the edutech space, a lot of the new solutions would become digital. And on the fundraising side, in terms of the different options, they would also become increasingly available online. Like, for example, right now you can see that quite a few angel syndicates, they are, providing individual investors an opportunity to get access to great startups online, be it through crowdsourcing platforms, or through platforms like, for example, AngelList. And this is quite convenient for the potential investors because it does give them an opportunity to invest from the confines of their own home. But it does mean that the investors, once again, they do need to understand how to do proper due diligence, because otherwise they would be arriving at a portfolio which is ultimately it might look stellar on paper, but is not performing as well when it comes to the actual financial results, right? And those solutions which you have previously seen, which were available for many, many years before, because they're going digital, they will also become much more sophisticated in terms of, for example, being able to offer access to potential investments in startups from all over the world, or from across different verticals, as well as, to do proper due diligence, or to do co-investments across stages. So, for example, from seed stage all the way to Series B and beyond, which has not been done before. And part of the reason why I think that it will become increasingly possible is because right now, as you know yourself, there is an increasing amount of data which is available online, and this data would be increasingly feeding into the different due diligence and deal flow generation methodologies which are used by entrepreneurs as well as by angel syndicates and other investors to inform their fundraising processes or their business development initiatives, as well as to help, for example, the entrepreneurs to achieve their milestones, part of which I have already mentioned when it comes to the pitch deck development. And as a result, yes, to a certain extent, there will be more noise, but for the smarter entrepreneurs and investors, there will be definitely a much greater opportunity to actually refine the existing methodologies and to reduce the risk, as well as to give them greater flexibility when it comes to fundraising or portfolio management.
So, Alexander, in the last is not the question actually. I would love you to, give any advice or inspiring message to my listeners, especially startup founders and promising entrepreneurs. Any message that could change their life, could change their mind, could inspire them.
Well, look, I mean, I would definitely say that, having worked previously at an early stage venture capital fund and having been an entrepreneur myself, I do appreciate, how difficult it can get, how many times you have potentially thought about, stopping it all and going back to the corporate career. But for the investors, it is very, very important that you actually do believe in your product and that you are able to articulate your vision. So do understand why exactly have you decided to be an entrepreneur at the very start, and do build it throughout your investment deck, right? So articulating your vision, uh, being able to showcase the pain points of your product, and how exactly are you solving what the competitors have not, and do believe in yourself, because at this day and age, there is so many potential financing options available, online or offline. There are so many events which you can do to potentially generate the publicity that, um, if you are convinced in the strengths of your vision, do not be afraid to use any kind of potential media opportunity to reinforce your vision. Do not be afraid to even cold mail, even though often case it is not effective when it comes to potential fundraising, because what it does give you is an opportunity once again to learn from your own mistakes and to arrive at the ways of doing business as well as fundraising which are the most effective specifically for you.